Hey everybody, it's Eddie here, and in this video, I'm going to be sharing with you guys a chart that has helped me stay calm in the market time and time again. It's helped me enter into the market, and it's also going to be helping me exit the market. So if that sounds interesting, definitely stick around. The chart that I'm going to be sharing with you guys today is called the stock to flow model. If you're new to the market, this chart will be extremely helpful, and I encourage you guys to share this video with anyone that is new. But I'm going to share my strategy and my insight behind this chart of how it's helped me invest into the market, how it's kept me calm, and how it's going to help me exit the market. At the time of this video, the Bitcoin price is sitting around $49,000. There is a lot of panic in the markets right now, and that is because we just hit $65,000 and we've corrected about 26% down to 49K. At this point, there's a lot of people wondering if we've hit the top. And personally for myself, in my personal opinion, I don't think we're at the top yet, and I've actually added more to my position. Now, everything that I share in this video is not financial advice. Even Plan B, the creator of this model, says this chart is not financial advice, but it's personally helped me a lot, and I hope it helps you as well. I'll leave the link to this chart in the description box below in case you guys wanted to check it out, but I'm gonna go into the chart and show you guys the details and everything behind it. So this is how the chart looks like. It tracks the price all the way back from 2011 all the way to its current price right now. If we scroll down, you guys can read more about the indicator and how to view the charts. But the first thing I want to go over are the colors within this chart. When we look at the blue areas, it kind of shows the bottom of the market. When we see the red dot, it kind of indicates the beginning of the bull market. Orange is kind of in the middle, and once we start seeing like this yellowish greenish color of the chart, that kind of indicates, all right, it's time to slowly exit out of the markets. Now, another thing you notice is that every time we flash kind of in that yellowish greenish area, it's always overshot a little bit. So in December of 2013, the model said that the price should be around $167, but we did shoot all the way up to almost $1,000. In the same case over here, back in December of 2017, it said the Bitcoin price should be around $5,000, but that is when we shot all the way up to $20,000. This year of 2021, it says that Bitcoin price should go up to $87,000. We could possibly shoot up a little higher and potentially hit around the $150,000 range. So around summer of 2020, when I started to see these red dots accumulate, that is when I tried to buy as much Bitcoin as possible, accumulate as much as possible, because I knew that once we started flashing red, we're gonna start trending upwards along this line. Now, every time the dot was above the line, that indicated to me that the Bitcoin price is currently overvalued. And every time we were under the line, that indicated that we were undervalued. So anytime we were under the line, that's when I would buy. Anytime we were over, I wouldn't buy. Right now, the Bitcoin price is under the line, which indicates to me that it is currently at a discount. Now, the reason why this chart has helped me so much is because it allows me to step back and look at the larger picture of where the overall market trend is going. Because when Bitcoin price goes up, the entire cryptocurrency space does well. When Bitcoin's price doesn't do well, the entire cryptocurrency space doesn't do well. And knowing that we haven't flashed a yellowish green dot indicates to me that the Bitcoin price has still more room to go. Even in 2017, we were under that moving average line until December when it started to fly off. Another reason why I do stay confident even when the price dips is because every time we look and compare each blue dot, each red dot, each green dot, every time it reached those price levels, we never saw those price levels again. Meaning that even back in 2016-17, when we were hovering around the $1,000 range, we never saw those price levels again once we shot up all the way to 20,000. Even at its lowest, we hit around $3,000. Meaning that when we start going up here and we overshoot a little bit and we start dipping down, the new low that we'll probably see again is the $50,000, $40,000 range, which is crazy to know. I doubt that we're ever gonna see the $20,000 range again unless, you know, something crazy happens to Bitcoin. There are two words you need to be aware of when you enter into this market. There's technical analysis and there are fundamental analysis. Technicals is when you look at the charts, you use indicators, you look at patterns, you try to predict where the price level is gonna drop. And for 99% of you guys that are investing into this market, it's not gonna really matter because traders look at technicals. For investors, we look at fundamentals. Fundamentals is based on us investing into a project or into an asset based on its intrinsic value. So if we see value in a certain company or in a certain asset, then we invest into it based off of fundamentals. So we see news like PayPal integrating a cryptocurrency as a form of payment. Venmo is also integrating cryptocurrency as a form of payment. Just 2 days ago, Grayscale added nearly $1 billion in crypto in 24 hours. Canada just launched the Ethereum ETF. And then we have the MicroStrategies, the Teslas, ARK Investment, investment, buying into Coinbase stock. And then every time the price dips, guess who buys? The smart money, the institutions, people who want Bitcoin at a discount price. And that is why we should not panic sell. A lot of the people that, talk about the Bitcoin price online, on YouTube, anywhere, it can sometimes get extremely stressful, right? Especially when people give like potential price targets of how low it can drop. Say it's at 50,000. People are saying, we can drop as low as $42,000. When I hear stuff like that, I get really excited. I'm excited to buy more. But for new investors, when you hear stuff like that and you look at how low your portfolio can go, you can get extremely worried. It can get very scary at times. The worst thing is when you sell at the bottom and you think in your mind you made a smart decision because you want to buy lower and the price continues to go up and you're buying at a higher price now. And so that is why we want to sometimes step back, look at the stock to flow model, ignore all the noise, the fear, uncertainty, and doubt, and just focus on where the Bitcoin price is projected to go. And of course, there is no guarantee that it will continue to go up, but what I can tell you, and you can ask anybody that's been in the cryptocurrency space for a long time, we've never had this much interest, this much news, this much coverage, this much interest overall in the cryptocurrency Bitcoin space than today. Because of internet, a lot of the news and information is circulating much quicker, much more people are finding out. And if I was in the shoes of a large institution, I would want to buy Bitcoin when it's 30% cheaper from its all-time high. Would you rather buy a computer at its retail price, or would you rather buy it when it's at a 30-40% discount? And that's always been my investing strategy. Every time there is a discount in the markets, I'm gonna always be buying. Every time it's going up, I don't buy. I never buy anytime the price is going up. I always wait for a dip. Now there are 5 tips I wanna share before I end this video, and the first one is gonna be do not panic sell and buy the dip. Say you invested $100 into Bitcoin and it dipped down 50%. Now your $100 is now worth only $50, and say you sold at a loss. In order to make your $50 back, you have to make 100% of your money back. A lot of people think, oh, I lost 50%, then all I gotta do is make 50% back. Then your portfolio would only be sitting around $75. The best thing to do is add more to your position so that your average cost will go lower. So buying the dip has always been the best strategy to lower your average cost down. That way you can break even quicker, and when the market continues to go up, you are in profit versus a loss. Tip number 2, I've already mentioned it, which is never buy the top, always wait for a dip. When you buy at the top, you are putting yourself at a much higher risk than someone who is buying at the bottom. Every time you are buying at the top, someone is planning to take profit at the top, and that is when we usually see the price drop. If you buy at the top and the price drops 20%, well, you are now in a much larger loss. But let's just say that you bought at this dip. How much lower can it really go? Say it drops an extra 5%. Would you rather be in a 20% loss or 25% loss versus a 5% loss? And every time there is a dip, someone around the world is excited to buy at that discounted price, which will most likely result in the price rebounding and going back up. The third tip is to stop checking your portfolio every single minute. I've been there where you check the price every second, and it's like the worst thing when you start to see your portfolio drop every single minute, every single second. But you don't want to do that because it's going to cause a lot of different emotions in you. Every time the price goes up, you'll be happy. Every time it drops, you're going to be stressed. You're going to have these mixed emotions. And that's when irrational parts of you start to come out. You don't want to do that. That is why I like to lock up my cryptocurrency with crypto.com and earn interest through there, because when I lock it up, I can't touch it. So I can't really do much. So I just leave it there to earn interest. And I leave a part of my portfolio also in BlockFi where it earns interest, knowing that even when the price drops, I am still earning interest on my cryptocurrency. They're still working for me. If you guys want to check out on earning passive income, earning interest through your cryptocurrency, I'll leave those links down in the description box below or links up here. But moving on to tip number 4, which is to have cash flow. This is a problem I see right now within the investing circle. People tend to invest all of their cash into the market, whether it's the stock market or into cryptocurrency, without really having a proper cash flow, meaning that they don't have a consistent amount of cash coming in. They are expecting that whatever money they put in, they're gonna get 2 times or 3 times more back. When in fact, it just doesn't work that way. It takes time for the market to go up and cool down. The reason why I don't stress out when the market dips is because I know that every week, every month, every day, I'm getting paid somewhere through passive income or through my cash flow sources. So I know that I will always have enough to pay for my expenses and have extra cash to invest into the market in case there is a dip. So before you invest, I think the proper question to ask yourself is, should I invest? Because if you feel like you don't have the proper cash flow and you only have, a tight budget, don't invest. It's better to invest into yourself first, create that proper cash flow and system in place, then start investing. Lastly, have an exit strategy. This topic alone can be a whole video, which I do plan on creating, but just to give a summary of what I plan on doing is once we, cross that line of the stock to flow model, I will start exiting out of my position every single week until I sold everything. Yes, and I do plan on selling all of my position because that is part of my strategy. For some people, it'll be to exit 75% of their position, 50% of their position. It really depends on your strategy. But as I exit out, if Bitcoin reaches a certain price or Ethereum or Cardano reaches my price targets, I'm going to completely sell out of it regardless if the price continues to go up. And if the price dips, I'm not going to rebuy back in because that is not part of my strategy. Of course, the ideal situation for everybody will be to sell at the top, but nobody can time the top. Nobody knows where the top is. But there's a lot of opportunity to make money in the middle, which is the opportunity that we are in right now. So when in doubt, zoom out, look at the chart. But at the end of the day, none of this is financial advice. But if you are just entering into this market, I do encourage you to spend at least 100 hours studying and researching so that you can understand this market better and you can form your own opinion and have your own strategy and not follow anyone else's. Because your goals are not my goals and my goals are not your goals. Well, that'll be it for this video. If you enjoyed this video, please give it a big thumbs up. If you guys have any questions or comments, leave it down below. Feel free to share this video with anybody that you know. And again, check out BlockFi where you can earn a $250 bonus signing up with them. All the details in the pinned comments down below. Thank you guys so much for watching. I'll see you guys in the next video. Over. Good night, good morning, adios.